Should you take an early retirement from your federal career, and what's the financial impact of doing so? Look, an early retirement is an amazing thing if it works. That's the question though. Will it allow you to continue to meet your goals and live the lifestyle that you want in the future? Now, I want to take a look at this from a few different angles. The first is an early out from your agency under the VERA program, the Voluntary Early Retirement Authority. And secondly, in a subsequent video, I'm just going to go ahead and explore what it looks like to retire early before you're eligible for that immediate annuity, what the impact is there. Hey guys, I'm Justin. I run a wealth management firm here in Northern Virginia, focused on helping families in their 40s and 50s answer questions just like this every single day. And we've helped hundreds of federal employees on their way into retirement. Let's get back to the question. So opportunities for an early retirement pop up every once in a while when your agency applies and is approved for a reduction in force. Now this happens when your agency wants to reshape, restructure what they're doing, their goals for the future. And the VERA program, the Early Retirement Authority, allows them, it's a temporary measure that allows the agency to reduce the age and service requirements for you to be eligible for an immediate retirement, right? So you get immediate benefits, whether it's annuity, health benefits, etc. The agency gets more people off the books, are able to go ahead and cut labor costs, and they can move forward with their plan. So it's an incentive that could work for both parties if the numbers work, right? And that's kind of what we're trying to explore here. Now, there also may be an incentive payment attached under VSIP. So this is just a lump sum payout that sometimes an agency will attach as a little added bonus, and it could be up to $25,000 as the maximum amount allowable. To be eligible under either one of these programs, VERA or VSIP, you must be age 50 with at least 20 years of service, or any age with 25 years of service. So technically you could be as young as 43 if you started your federal career at the age of 18. Some more of the details, the annuity calculation, if you take the early out, is exactly the same as normal retirement. So 1% times your years of service times that high 3 salary. There's no reduction though if you're under the age of 55, whatever your MRA is. You can also tack on sick leave to increase your years of service. So that works the same way there. What about the special retirement supplement? The FERS annuity special retirement supplement will apply under an early out. Okay, so if you have 1 or more years of calendar service, you can be eligible for this. The kicker here is you have to be MRA for this thing to go ahead and start for you. So if you retire prior to 55, 56, 57, whatever it is, you have to wait until you're MRA before that payment will then start to kick in for you. Okay. Now, FEHB, the Federal Employee Health Benefit Program, also eligible to be carried forward under an early out. The same requirements apply, 5 years of service, being enrolled in this thing, or as long as since you were first eligible to be enrolled in FEHB. The program is going to work exactly the same. The only difference is going to be you're going to pay premiums with post-tax dollars instead of pre-tax dollars. FEGLI, the Federal Employee Group Life Insurance Program, also can be continued, but only if you've carried this for the previous 5 years. It's more of a hard and fast rule on that one. Now we know that coverage gets expensive as your age increases, the price bands apply, etc. Something to consider on that front as well. So those are the details around how the programs work, but what does it mean to you from a financial standpoint? Here's how to think about this. Are you using this as an opportunity to retire completely? You don't want to work anymore at all. You're leaving your federal career and retiring, riding off in the sunset. Or is this the stepping stone, the springboard that you need to just leave your federal career and do something else, find another opportunity? So 2 distinct ways to think about this and approach it. I think the best way for us to illustrate the financial impact is to look at a couple of examples. So in this first example, we're going to say an employee was offered VERA at age 53 with 30 years of service. So they started their federal career pretty young, and they've got a high 3 of $160,000 a year. Their MRA is age 57, and VSIP is not offered. So the FERS annuity looks like this: 1% times 30 years times 160,000. That gives you $48,000 a year coming in as your FERS annuity each and every year. Now they're married, so they're going to want to go ahead and protect the spouse, so they have the annuity benefits and can continue health benefits, etc. if they do accept this. And so that looks like a 10% reduction from $48,000, $4,800 coming off that. Your annuity is now $43,200 a year. Okay, so pretty good chunk coming in, but pretty significant delta from where they were before at $160,000. So we need to discover what are the projected living expenses going forward? And also, do they have other assets that can kick in and start producing income? Now, we talked about the special retirement supplement, right, with the FERS annuity. That would apply in this case, but not until they reach MRA, which is age 57, 4 years down the road, right? So you got a little bit of a gap there. What does that look like? So to calculate this thing, it's a little complex. The special retirement supplement, or SRS, is always a bit less than what your age 62 Social Security benefit projection is. And that's because it's just based on your federal years of service. So in this case, they got 30 years. They're making 160 grand. So we're going to go ahead and assume they've been at the top of the Social Security earnings base. And so they're going to earn a max benefit. All right, a fair assumption. At age 62, according to SSA.gov, the max benefit at age 62 is $2,572 a year. That's for 2023. So if we take that number in our calculation, it's going to look like this. So 2,572 times 30 years of service divided by 40 gives us another $1,929 a month. So $1,929 a month, or $23,148 in your annual hypothetical SRS benefit to go alongside your FERS annuity. But you got that 4-year gap. Now, let's talk TSP. Because they retired at age 53, they can't touch their TSP until they turn 59 and a half. If you retire, separate from service at 55 or later, you can go ahead and access that at 55. So an earlier age there saves you 4.5 years. Cost of living adjustments also are not going to apply until they reach age 62. That's just how the annuity works, no matter in the early out situation or a normal annuity situation. All right, so that's a 9-year gap when we're talking about inflation, the impact there to go along with this. So to me, it looks like they got their FERS annuity from 53 pretty much until 57 when SRS kicks in. Can't touch TSP, not getting cost of living adjustments. So this is a little bit of a heavy lift to me, right? Maybe there are significant other assets. Maybe they're willing and able to live on a much lower amount of income. But to me, this situation looks ideal for somebody that wants to move on from the federal career and do something else. Maybe start a second career, do something they're passionate about, or just work at a job where it's covering, what you need from an income standpoint with much lower levels of stress. All right, example number 2. So a little bit older employee here. These are very similar circumstances. VERA offered at age 58 to an employee with 25 years of service and a high 3 salary of $160,000. So same salary there. Minimum retirement age 57. Again, VSIP is not offered here as well for simplicity. All right, so the annuity calculation, 1% times your 25 years of service times your 160,000 comes out to be $40,000 annually. Okay, so another nice chunk of change. You're going to reduce that again by the 10% for the survivor protection benefit, just to protect the spouse, and that comes down to $36,000 a year. Okay, so nice FERS annuity, $36,000 a year pre-tax. Special retirement supplement in this situation would kick in immediately because we said they're 58 years old. Okay. So similar calculation when it comes to trying to figure out what amount that's going to be. So we're going to take, again, that max number because they're the same salary levels. Reasonable assumption, I think. 2,572 times your 25 years of service divided by 40 gives us $1,607 a month, or $19,290 each year. Okay, so we got $36,000 plus a little more than $19,000 coming in on SRS immediately. All right, so that's $50-some thousand, almost $55,000 there. Now TSP would be accessible immediately. So depending on what they have there, they could access that because they retired after 55. They're not 59 and a half yet, but they can still access it. COLA is still not going to apply until they're 62. So less of a gap, 4 years to account for the impact of inflation. We know that's been a headache lately. Okay. So that situation looks a lot more workable if they want to ride off into the sunset. Still a challenge though. I mean, if you're going to talk about taking money from a TSP, you need to consider safe withdrawal rates. What is the balance there? What are the other assets? What are the projected living expenses? Are they going to live on less? Is there enough to make up what they were making pre-retirement? We don't know what the rest of the financial picture looks like. But we do know what the sources of income will be from VERA, from that early out. So ultimately, this comes back to the question of how much is enough to sustain the lifestyle, the retirement that you want. What are your goals? Complete retirement, or just using this as a springboard to the next chapter, right? And a lot of folks we found really don't want to retire fully, but they do want to do something different, right? Some of those options become a lot more viable when you have a secondary income stream from your first annuity, and then health benefits that are predictable, right? That makes it a lot easier to think about those other options, which could be using your knowledge and experience to start that second career, working on a passion project, or simply just working a job that has less stress, that's going to provide the income that you need to kind of bridge the gap until you can fully retire. All right. So there's no right or wrong answer here. It's kind of how you feel, how the numbers look. And let's not forget the other option exists. You don't have to take the early out just because it's offered to you, right? So continuing with your federal career is a completely viable option. Continue to accrue those benefits. Maybe you enjoy and love the work as well. I know a lot of people do. So that's another good option as well. So just a quick recap here. If you're on the younger side of things, VERA can be a little bit of a heavy lift unless you have significant assets or you're willing and able to live on less for a period of time. On the other side of things, the guaranteed pension income, the health benefits can really be a nice push to do something else. Some of the costs and considerations, all right, you give up the 1.1% multiplier on your first annuity. That only applies if you make it to age 62 on an immediate annuity. COLAs, you don't get a cost of living adjustment until you turn 62. Inflation can be a factor if you're retiring early, can really erode the benefits there. The special retirement supplement doesn't kick in until your minimum retirement age. Still be eligible for it, just have to wait until your MRA. And then of course, you give up TSP, agency matching contributions, as well as any agency contributions to your first annuity, etc. Those benefits stop accruing, of course. Now, the advantages, of course, early retirement, the ability to do something else. Those are great things. And you have an immediate annuity, you know, to supplement whatever else you're doing. So that can be a powerful thing. And of course, predictable health benefits. So those are all really cool benefits to, you know, put together what the right decision is for you, weigh those against one another. I'd love to hear your thoughts on early retirement and what retiring well looks like to you. If you need help, second opinion, if you need a resource in your retirement planning journey, we'd love to hear from you and be that resource. And if you're a do-it-yourselfer, I hope you found some of this information useful as you go ahead and make your own plan. If you haven't subscribed to my channel, I would really appreciate if you click that subscribe button, and I'll look forward to seeing you again in the next video.